Hey, what's going on, my friends? It's your man, Adam Ace Spencer, and we're going to dive into our growth portfolio update that we do every weekend. But first, I wanted to make sure I shared this important article, this news, this note, this word of advice from the one and only Jim Craner, Jim Cramer, who warns investors still betting on high growth tech stocks. I don't think it's going to work. Well, my friends, yes, Cramer says if you're still betting on high growth tech stocks, it's a bad idea. Cramer had this warning on Thursday. He cautioned investors that buying the dip on high growth tech stocks is a losing strategy in today's turbulent market. The era of beat and raise and buy no matter what is over for the formerly high-flying growth stocks. There's still plenty of other stocks out there, but if you're still betting on these bouncing back, I don't think it's going to work. Growth stocks are particularly susceptible to inflation, Cramer said, because it hits the value of future earnings. You may think these companies are the greatest thing since sliced bread, but the pros know not to pay as much for unprofitable sliced bread when there's an inflation spiral. So, hey, my friends, this is, I don't want to, I know I'm kind of poke and make fun and joke, oh, whatever Jim Cramer says, we got to do the opposite. But, it is a word of, caution. It is a little warning. It is a little heads up because you do want to make sure you're investing in companies that you believe in. That's what we're doing with this portfolio. For those of you who are new, well, we'll jump in here. I'll give you a little background info in a moment. We start with our regular, let you guys see how things are going over the past day. You can see we're down 5.18%. When we jump and look at the past week, we're down 5.81%. The past month, we're down 3.02%. The past quarter, we're down 35%. The past year, or all time, we are down 41%, which is negative $372.81 is our gain, giving us a current value of $952.01. So, hey, obviously things are very scary right now, right? We're down quite a bit. This is like insane. And to Mr. Cramer's, his point, he's basically suggesting, since we're down so much, to give up on these companies. Don't continue investing in them. You're already down so much. And at this point, stop, kind of trying to invest in the future and instead invest in who is currently proven. Invest in who has already shown us that they are, a solidified company, a company that deserves your money. That's kind of what he's saying. And when I scroll down and we take a look at our portfolio and see, okay, who's performing well, who's not performing well in our portfolio, you can see right now at the top of our list, we have ChargePoint, which is up almost 7%. Then we have CleanSpark, which is up 6%, followed by Nvidia, which is up 0.74%. Everyone else is unfortunately down quite a bit. So we got Backed down 27%, followed by Fuel Cell Energy down 31%, SEM Rush or SEMrush down 41%, Coinbase down 48.73%, DraftKings down almost 53%, and then Palantir down 58%. Now, if I was in a position where I'm thinking about retiring over the next year or 2 years, okay, I hear Cramer's point. I would not be continuing to invest in growth stocks to this extent. However, I'm not going to need any of this money that you guys are currently seeing contributed to this portfolio, which amounts to a total of $1,325. Want that $1,325. And I don't intend on touching any of this money anytime soon. So for me, And in taking the approach that we're taking, which is a dollar cost averaging approach, we're contributing a small amount on a consistent basis. So for those of you who are new to this channel and you're not familiar, what we did was we started this portfolio back on October 8th with $100. And then I think I had only one company at the time. It was ChargePoint. And then I added an additional $600, which was basically $100 per company. And that's when I added the additional companies. And I think at some point over the past like 2 months, I added SEM Rush and CleanSpark. So it gives us a total of 9 companies currently in our portfolio. The goal is to add one more, or an ETF, an index fund, but add one more holdings in this pie, this portfolio, giving us 10 different slices, as M1 Finance refers to the portfolios or the pies. Each one is a slice. So we want to have 10 slices in here in total. And, I'm kind of waiting a little bit to see how the market continues to develop and perform the rest of this year. I believe there's a chance things are consolidating a little bit right now, and then things will kind of potentially have another little downfall, or it might happen kind of soon. I think the market just kind of needs to correct. It's been on a run over the past few years, really, and to me, I agree with what Cramer is saying to some extent, right? If you're looking for a way to make quick cash right now, if you're like, hey, I want to find a company it's going to rip over the next, month, few months, 2 months. Okay, some of these companies might not be, you might want to hold off on growth plays, to his point, but maybe not. And oftentimes it will be the companies that are beat down so badly that don't deserve to be beaten down so badly that come back. It's that slingshot effect. It's just going back and back. At some point, it's going to just, you're winding it up so much, it's going to just rip and truly explode. So as I've mentioned before, all the companies in here are companies we believe in. I mean, the one company that I question the most is Fuel Cell. And, even with Fuel Cell, because of our dollar cost averaging approach, where we buy a small amount of every company, of our portfolio every week, our average here, as you can see, the price is $5.44. Meanwhile, our average is $5.76. So we're not, if we, with a few more contributions, and it might even be something where, because the market is down, we do want to take advantage of these lower prices. Of course, it could go lower. So one of the considerations is, okay, instead of doing our regular $25 every week, maybe we increase the, up the ante to $50 a week, just for a short period of time, to allow us to benefit from all of these lower cheap prices that we're seeing all across the board with a number of the stocks that are inside of our portfolio. Now, if we are, like I mentioned, in a position where you need this money soon, well, you certainly don't want to have your money inside of a growth portfolio. The money should be in your, emergency savings. Well, not your emergency savings, but that should already be there. But it should be in some other, another checking account, another savings account. Or if you do have it invested, put it in more, reliable companies that have already proven themselves and more aligned with what Cramer was saying. This certainly isn't a situation where the market's going to just bounce back immediately. No, things are still dragging on with Russia and Ukraine and inflation. And, there's still a number of contributing factors that are playing a role with where the market currently stands. So all of that being said, you need to be smart with your money. Of course, we want our money to work for us, right? That's why we're investing it. We want it to grow for us, and you don't want to lose value because it's just sitting in a savings account and inflation will eat it away. We understand all of that. At the same time, again, got to be smart with it. And we do want to take advantage of the market, though. When there are sales like what we're pretty much currently experiencing, you do want to benefit from it, which is why taking this dollar cost averaging approach, contributing a small amount every week, is a effective strategy for us. and why I continue to do it despite the way the market continues to perform. And, it's important to note like the kind of companies you have in your portfolio and how they might be influenced based off of what is going on in the world. And, in that particular industry, something like SEM Rush, which it might not seem like, oh, this is something that should be negatively down and whatnot as much or what, and so on. But when you actually, if you know a thing or two about the company, you know that, like the founder and whatnot, and they do have basically it was started, I don't know if I would say it started in Russia, but the founder, and there's a large part of the company's team and whatnot is in Russia. They do have their, I believe, headquarters or one of their major offices in Boston, here in Boston. So, it's like, all right, that's why it's still afloat. It's still doing solid. But I'm sure everything going on with Russia and Ukraine isn't helping with their current stock price. Fuel cell energy, something that's energy related. We know the price of oil is continuing to go up, and with the way things are, what's going on over there, again in Ukraine and with Russia, oil will probably continue to go up higher. That might have even more of an influence or impact on a stock like fuel cell energy. We see backed holdings and CleanSpark as well as Coinbase are all kind of relevant to cryptocurrency. Well, we know Bitcoin, you look at Bitcoin over the past 1 year, and you can see, Bitcoin had reached over $60,000 a few times. Most recently, it got up to about 60,000 right there. You can see it's almost $67,000, and it is all the way down to currently today at $38,000. So if you have companies that are connected to or there's some relevance with, again, a particular industry, in this case cryptocurrency, such as backed holdings as well as CleanSpark and Coinbase, well, they probably will likely be down a little bit as well, or again, just there's going to be some correlation there. And so you see it across the board. And ultimately, if you believe in the companies in the long run, in 5 years, do you think they're going to be better off than where they are today? In 10 years, all of the companies in this portfolio, like I said, I mentioned the one that I'm still a little iffy on, but everyone else I am confident in, I believe in, and that's why they are here in this portfolio. And that's why we continue to invest our hard-earned money into these companies. We want to get our money to work for us, to grow for us. And one way to do it is by investing in growth stocks. So I have a link down below if you want to get started using M1 Finance, where you can get your money to work for you as well. And if you do use my referral link, fund your account with at least $100, you can get some free cash that you can then reinvest, or invest in your portfolio as well, and get that money to work for you. But my friends, yeah, get grinding, make some cash, make some money, and consider starting your own growth portfolio. Or maybe you want to work with something more reliable. Consider checking out the dividend portfolio, which we do have. I did have that update yesterday. Things are still going pretty well over there, so that might make you feel a little more confident than taking as much of a risk, such as this growth portfolio. But as they say, with great risk comes great reward. So I understand this is a long-term move, 5 years, 3 years, 10 years. And the goal, the thought is, hey, every company in here will be much more successful, will be more profitable, will be well beyond where they currently are today. And since we are staying loyal to our plan, we're continuing to buy them at these lower, cheap prices, despite the warning that Jim Cramer is giving us. So feel free to leave a comment down below about your thoughts. Do you think he's rubbish? Do you think we should listen to him? Should I stop investing in this portfolio, throw it all in my dividend portfolio, put it all in my Roth IRA? What do you think? What should I do? What are you guys doing? Leave a comment down below. Let me know. And while you're down there, don't forget to smash the like button. And of course, subscribe to the channel. Hit the notification bell. That way you can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.